Namaskar and good morning to all of you. Today, I want to review three reasonably good companies which we have done already in the past. They are Tanfac Industries Limited, Meghmani Organics Limited, Philips Carbon Black Limited. We have done these things earlier in detail. We'll look at them because Q2 results are coming. Now you will need to remember to look for these companies' results. For that reason, we are reviewing all these things. Now, Tanfac Industries Limited has produced a sterling performance in Q1. Net sales have increased by 57% year on year and 17% quarter on quarter. 57% increase in net sales year on year and 17% quarter on quarter. Now Q1 net sales are some 56 crores. Net profits have increased by 461% year on year and 469% quarter on quarter. So this quarter has been special as regards profit margins are concerned. Net profits at 13.08 crores has shown 461% growth year on year and around the same quarter on quarter also. Equity is static at 9.98 crores and basic EPS also has gone up likewise in tandem with net profits, 463% year on year. The market price currently is 272 rupees. Now, if you look at the 52 weeks high and low, it is 51 and 403. 51 is low, 403 is high, 52 week low and high. Market price is somewhere in the middle at 272. Year before the price was 77 and during the year the prices have increased by 338%, which means Tanfac Industries was a good multi-bagger during the last 1 year period. Face value is 10 rupees, price earning is attractive at 5. The revenue in the last 5 years have grown from 116 crores to 165 crores, a CAGR of 9%. Now this is due to both sales realization and price increase. That is production. You have sold more and you have increased the price of sales also, both. The company manufactures hydrofluoric acid, sulfuric acid and aluminum fluoride basically. We have talked about 5 years increase. Now FY18 over FY17. That turnover rise was 19%, quite impressive. Net profit has increased in the last 5 years from minus 3 crores to plus 10 crores. That is annual that we are talking about. The increase over the previous year, FY18 over FY17, if you look at that, there was an increase of 194% in the net profits. Quite impressive. Last year improvement also was impressive. Q1 over last Q1 also was very, very impressive. Profitability has increased significantly due to optimization of product mix, customer mix. They have optimized the product mix and they have also optimized the customer mix. They have selected the customers carefully. And lower input costs and higher sales prices. So all factors included. Debt equity ratio has come down impressively from 12.5 to 1.9. Now in 1 year reduction is 63%. 12.5 to 1.9 is in 5 years. In 1 year reduction is 63%. So Tanfac, as you know, it is a joint sector company between Aditya Birla Group and TIDCO. It is at Kadalur, somewhere down south. Manufactures hydrofluoric acid and its derivatives. It is the largest producer of anhydrous hydrofluoric acid and aluminum fluoride and sulfuric acid. The sulfuric acid price in the recent past had gone up from 6,500 to 14,000 and has come back to 10,000, and it's somewhere around that. Therefore, in Q2 also we may expect some higher revenues from sulfuric acid. Now, in case of hydrofluoride, Tanfac sees a lot of potential. So naturally it might like to increase its production and further, whatever capacity is there, some more capacity, and also it is capable of forward integration into derivatives. That also may be done. The present capacity is around 15,000 metric tons, so it may go up further. So capacity utilization also has to be increased further, so that they may do. Now here they have an advantage. All the three products that are manufactured by it are interchangeable within that capacity. Therefore, the company may like to increase the production of the most profitable product and reduce the production of the less profitable products. Sulfur is being imported, but the import cost is increasing due to rupee depreciation. It is being fully passed on to the customers, so there is no impact on the margins. So Tanfac Industries is like that. Now watch for Q2 results as and when it comes. The next good one is Meghmani Organics Limited. Meghmani Organics Limited, not comparable with what we have seen just now, Tanfac Industries, but its future is going to be better, it seems. Net sales have increased in Q1 by 13% year on year and just 1% quarter on quarter. Net sales in Q1 have increased by 13% year on year and 1% quarter on quarter. Net profit has increased by 28% year on year in Q1. Q1 net profits have increased by 78% year on year and no increase quarter on quarter. Equity is static at 25.43 crores and EPS is 2.5, an increase of 94% year on year and 26% quarter on quarter. The market price is 76. It is almost at 52-week low. 52-week low was 75, now it is at 76. 52-week high is 129. Now price earning is 8.1, slightly higher than Tanfac. Probably because it is having a large expansion program. Now the prices have increased. Last year before the price was 80, so approximately the same thing. That means there is no real increase over a period of 1 year. So it was not a multi-bagger last year, nor a compounder last year. No, but next year maybe it is attempting a number of things. So you have seen Q1 net profit has gone up by 78%. So current year may see much better results. Now it is in 3 segments: pigments, agrochemicals, basic chemicals, and it is present in more than 75 countries. There are 7 manufacturing facilities in India. It has got subsidiaries in Indonesia, Dubai, Europe, and some representative office in China. There are 4 warehouses in foreign countries like Turkey, Russia, USA, Uruguay, etc. Now, it is one of the top 3 global phthalocyanine-based market player. One of the top 3 phthalocyanine-based market player. It is also one of the largest pesticide manufacturers within India. And it is the 4th largest caustic chlorine manufacturer in basic chemicals in India. It has got more than 400 customers in pigments and agrochemicals across the globe. Exports are much more in pigments and agrochemicals. 2,800 stockists, etc. within India. So stockists within India may be basically for basic chemicals. Now the revenue has grown at a CAGR of 11.2% over the 5-year period. The profit after tax has grown 61% over the 5-year period, CAGR. Debt equity is just 0.35x. Now, the pigments and agrochemicals are showing good export potential, more than 50%. Now, but there is no exports in basic chemicals. Now, the company is having a huge expansion plan of 6.4 billion rupees. By December 18, it wants to complete an 18 lakh 40,000 MTPA project for chloroform, carbon tetrachloride, etc. By June 19, it wants to complete another project of caustic soda, 2,71,600 MTPA. By the same June 19, 2019, it wants to complete another project, 30,000 MTPA of hydrogen peroxide. So these are margin accretive, EBITDA margins will grow, profits will grow. So this is another very good company. Watch for the Q2 results and its future also. The last one is Philips Carbon. Here net sales has increased in Q1 by 34% and quarter on quarter by 4%. So Q1 net sales have increased by 34% and quarter on quarter by 4%. Net profit has increased by 103% year on year and quarter on quarter by 31%. Net profits have gone up by 103%, impressive reasonably, 31% quarter on quarter. Equity capital is 34.47 crores. Basic EPS has grown to 5.66. Here also year on year increase is 103% and quarter on quarter is 31%. The market price is 238. Year before it was 116 and increase is 101%, something like that. Somewhat reasonable multi-bagger last year. Volumes are good. Face value is 2 rupees. Just watch out for that. There are capacity expansions which are planned here. 56,000 tons capacity expansion will be completed in Mundra, Gujarat by Q3 of the FY19. 32,000 expansion will be at Palais in Gujarat to be completed in Q2 of FY20. Both with some 450 crores, something like that. And another is planned with 1,50,000 tons per annum at 600 crores. Originally it was planned for Tamil Nadu, now it is being shifted to either AP or Telangana, something like that. So it produces more than 50 plus grades of carbon black. One of the best carbon black manufacturers in India. Therefore, watch out for Philips Carbon Black India Limited Q2 results. So these three companies which we have seen, Tanfac Limited, Tanfac Industries Limited, Meghmani Organics Limited, Philips Carbon Black Limited, all are good ones. Just watch out for this. Now, I repeat some of the things. Please subscribe and tell your friends also, investor friends, to subscribe and ask your friends to become investors. This is the best time for investing in the stock market. You can tell many people to enroll as investors. Go on listening to these videos at least 2-3 times. Do not make any rash investments during this period, but make good investments. Good period for investing, but don't make any rash investment. Don't make any rash sales, especially. Simply because the prices have fallen, don't make any rash sales. If the sales are good, profits are good, products are good, expansions are there, stick with your portfolio. Bad ones dispose of, always. Thanks for listening. Again, I repeat, please subscribe. Stay as a long-term investor. Thanks for listening. I'll come up before you with another good video. Thank you.